Starting to invest in the stock market can feel overwhelming, but with careful planning, it can be rewarding and a way to build wealth over time. So first, it's important to assess your financial situation and set clear goals. Determine how much money you can afford to invest without affecting your day-to-day expenses or emergency savings. Stock market investments should generally be made with money that you don't need for short term, as the market can fluctuate in the short run. Next, you're going to open a brokerage account. There are many platforms available, ranging from traditional brokers to online platforms that offer low fees and user-friendly tools. So when selecting a broker, consider factors such as commissions, account minimums, and the educational resources that they provide. Now, once you've set up your account, you're going to start by researching different investment options. All right? You can choose individual stocks, you can choose engaged trade funds, ETFs, or basically mutual funds, which allow you to invest in a diversified portfolio. Okay, so it's often advisable for beginners to start with ETFs, mutual funds, because they both offer different diversifications and reduce the risk associated with individual stock picking. All right, so before making a first investment, take time to learn about the basics of the stock market, investing, including market trends, risk management, and long-term strategies. And patience and consistency is key to successful investing. That's what you got to know.